You know, one of the biggest lies new traders fall for is the idea that more information equals better decisions. It sounds reasonable, it feels logical, but in trading, that belief quietly destroys your account. I've seen it hundreds of times. Traders send me screenshots of their charts, and the moment the image loads, I already know why they're losing. The chart looks like a science project. Indicators piled on top of indicators, lines everywhere, colors flashing, nothing but noise. And when I ask them why they're using so many tools, they always give me the same answer. They say, "I'm trying to confirm my entries. I want extra confirmation." The funny thing is, they don't realize that every indicator is built from the same ingredient, price. So what they're actually doing is asking the same question 5 different ways and hoping the answers line up perfectly. They never do. And even when they do, they show up late. That's the trap. Let me tell you this as clearly as I can. Complexity does not make you a better trader. It makes you slower. It makes you hesitant. It makes you emotional. And the moment you hesitate in this game, you've already lost. Every extra indicator you add to your chart is like adding another voice to the room. One voice says buy, one says sell, one says wait. And before you know it, you've talked yourself out of perfectly good trades while convincing yourself to take the terrible ones. That's the paradox of clutter. You think it gives you control, but what it really gives you is paralysis. Think about the last time you stared at your chart for 4 or 5 minutes, trying to decide whether to push the button. You probably weren't looking at price. You were looking at the tools around the price. You were staring at RSI, waiting for it to cross some arbitrary level. You were checking MACD, hoping it would agree. You were watching a moving average like it was a traffic light. Green means go. Red means stop. And while you waited for these signals to line up, the market already made its move. The entry is gone. The opportunity vanished. But now you see the candles pushing without you, so you panic. You jump in late. You chase. The trade reverses and suddenly you're confused. You wonder why this keeps happening. It keeps happening because your tools are too slow. And it keeps happening because you're relying on indicators to make the decision for you. Beginners don't like hearing this, but I'm going to say it anyway. Indicators don't predict anything. They describe what already happened. They're like reading yesterday's weather report and trying to guess tomorrow's storm. You might get lucky, but it won't last. Real consistency only comes when you learn to read the market itself, not the tools grafted on top of it. And I know that sounds intimidating at first. I know some people hear price action and immediately think it's too advanced or too vague. But the truth is, price action is the only data that's not delayed. It's the raw conversation between buyers and sellers. Everything else is commentary. But let's step back for a moment and talk about the psychology behind all this, because that's just as important as the technical side. There's a reason traders keep crowding their charts with indicators, even when those indicators are the reason they keep losing money. The reason is fear. Human beings hate uncertainty. When we feel unsure, we try to compensate by gathering more information. In most parts of life, that actually helps. If you're buying a car, more information is good. If you're investing long-term, more research is good. But trading is different. In trading, too much information creates tension. The more you try to know, the less decisive you become. And instead of acting, you freeze. Here's something most traders don't want to admit. A cluttered chart feels safe. It feels professional. It feels like you're working hard. It feels like you're doing something intelligent, and it gives you a very addictive illusion of certainty. But that feeling is false. It tricks you into believing you're in control. And when the trade goes against you, you blame the indicators instead of noticing the real issue, which is that you never learned to read the market itself. Another psychological trap is this idea that simplicity is careless. Beginners think, if I remove all these tools, I'll have less information. And if I have less information, I'll make worse decisions. But here's the crazy thing. In trading, the opposite is true. The more you remove, the clearer everything becomes. A clean chart doesn't take away information. It strips away distractions. It gives you silence. It gives you space to focus on the one thing that actually matters. What buyers and sellers are doing right now. Not what they did 20 candles ago. Not what an indicator is calculating. What the market is communicating this very moment. I'll say something that might sting a bit, but it needs to be said. Most traders hide behind complexity because they're insecure about their skill. They don't trust their ability to read the market, so they outsource the decision to tools that were never designed to make decisions in the first place. That insecurity leads to dependence. And dependence leads to hesitation. You know that feeling when you drag your stop loss lower because your indicator says the trend is still intact, or when you close a winning position early because your oscillator dipped a little. That's not strategy. That's fear disguised as analysis. Now let's get into the solution, the thing that actually simplifies your trading and helps you make decisions faster, cleaner, and with more confidence. The approach is what I call naked trading. And before you think this is some extreme minimalist idea, let me explain what it really means. Naked trading is simply reading price action and volume without layering indicators on top. It's trading with the raw data. No filters, no delays, no interpretations. Just the market speaking directly to you. When you remove indicators, you're left with three things: the candles, the levels, and the volume. That's it. But those three things tell you everything you need to know. Candles show you aggression, levels show you intention, volume shows you commitment. If you can understand those three ideas deeply, you can survive in any market. Trends, ranges, breakouts, reversals, traps. You'll see it all with clarity. Let's break it down even further. Candles are footprints. They show the pressure between buyers and sellers. Long wicks tell you where one side got rejected. Strong bodies tell you who's in control. Consecutive pushes in one direction tell you where momentum is building. You don't need an indicator to tell you momentum is increasing. You can see it right in the candles. Next, you have levels. Levels are simply the places where the market repeatedly reacts. Support, resistance, previous highs, previous lows, ranges, consolidation zones. These levels act like emotional markers for traders. They're places where people get trapped, take profits, panic, or reverse. Indicators can't show you where traders are emotionally invested. Only raw price can. And when you learn to identify these levels cleanly, you stop guessing. You wait for price to come to you. No chasing. No fear of missing out. And then there's volume. Volume is the truth serum of the market. It shows you which moves are real and which moves are empty. A breakout with no volume is a trap. A breakdown with high volume is conviction. A rally with fading volume is exhaustion. You don't need a complex oscillator to tell you any of that. It's all visible in the bars at the bottom of your screen. When you combine these three elements, candles, levels, volume, you suddenly realize how much noise you've been surrounding yourself with. You start noticing patterns you never saw before. You start seeing traps earlier. You start recognizing strength faster. You stop waiting for confirmation from tools that never give it at the right time. And most importantly, you stop second-guessing your decisions. Some traders push back when I tell them to trade with a clean chart. They say, "But isn't that too simple?" And the answer is yes. It's simple, and that's exactly why it works. Simplicity isn't a weakness, it's clarity, it's precision, it's confidence. Every consistently profitable trader I know trades with a clean chart. They may use one or two tools in the background, but their main decisions are always based on price action. Let me give you a reality check. The market doesn't pay you for effort. It doesn't pay you for how complicated your chart looks. It pays you for accuracy. It pays you for timing. It pays you for discipline. Those skills come from clarity, not from clutter. Now, before we go deeper into the naked trading approach, I want you to reflect on one thing. Ask yourself this: are you trading the market, or are you trading your indicators? If every decision you make revolves around waiting for a tool to tell you what to do, you're not trading. You're following, and following will never make you consistent. You need to understand the market's language, and that language is spoken in nothing but price and volume. All right, now let's talk about how you actually start transitioning to a naked chart. I'm not asking you to delete all your indicators forever. You can keep them, just turn them off for now. Hide them, don't delete them. Don't break your workflow. This isn't a permanent separation. It's a 7-day drill. For the next 7 days, I want you to open your chart and remove everything except candles and volume. No moving averages, no oscillators, no clouds, no bands, nothing. Just price. You're going to train your eye to see the market without the noise. It's going to feel uncomfortable at first. In fact, you might feel exposed. That's normal. That discomfort is exactly what you need to become a better trader. For most traders, the first thing that happens when they clear the chart is panic. They feel like they're missing something important. They feel blind. That reaction alone tells you how dependent you've become on the indicators. And this drill is designed to break that dependency. It forces you to talk directly to the market instead of talking to the tools that interpret the market for you. Over the next few days, something interesting will happen. You'll start noticing things you never paid attention to before. You'll see how price behaves around certain levels. You'll see how momentum builds long before your indicators would have ever reacted. You'll notice volume shifts that reveal whether a move is real or fake. You'll see consolidation forming. You'll see liquidity being collected. You'll see stop hunts. You'll see hesitation. All the things your indicators tried to summarize for you will suddenly be visible without them, and you'll realize that you never needed all that clutter in the first place. The greatest gift of a naked chart is awareness. Instead of waiting for a signal, you're observing behavior. Instead of reacting late, you're understanding early. And instead of being overwhelmed, you're calm. A clean chart lets you think, and thinking is the single most underrated skill in trading. Let's go deeper into the core principles of naked trading so you have a framework for the next 7 days. The first principle is structure. Market structure is simply the relationship between highs and lows. Higher highs and higher lows indicate buyers in control. Lower highs and lower lows indicate sellers in control. Ranges indicate uncertainty and accumulation or distribution. Once you learn to identify structure, half your work is done, because structure tells you what side of the market you should be on and what kind of setups make sense in the current environment. Structure matters far more than any indicator. Every trend indicator you've ever used is just a delayed reflection of structure. A naked chart lets you see the shift in structure the moment it happens. When the market stops making higher highs, that's your first warning. When it fails to break a key level, that's information. When buyers aggressively defend a zone multiple times, that's information. You won't need a moving average to tell you which direction the market prefers. The candles will tell you directly. The second principle of naked trading is levels. You cannot trade effectively until you learn to mark your levels with precision. Every market has areas where traders consistently react. Previous highs, previous lows, demand zones, supply zones, liquidity pools, imbalance areas, and mid-range levels. These levels are where decisions happen. They're where traders get trapped, where breakouts succeed, and where reversals form. The more you practice identifying levels, the more predictable the market becomes. When you rely on indicators, you stop looking at these levels. You wait for a tool to give you a green or red light, and you ignore the fact that the market has memory. A naked chart forces you to confront this memory and learn from it. You start to see that every move is connected to a previous move. Every rejection tells a story. Every breakout has a context. Every trend has a beginning and an end. The third principle of naked trading is volume. Volume is the heartbeat of the market. You want to know whether the market cares about a certain move? Look at volume. When price pushes into a level with weak volume, that's hesitation. When it slams into a level with strong volume and breaks through, that's conviction. When volume spikes during a reversal, that's conflict. When volume dries up during a pullback, that's temporary relief before continuation. Volume confirms intention. It separates noise from meaning. And when you combine volume with structure and levels, you can read the market like a language. You won't be perfect, but you'll be aligned with reality. And that alignment is what reduces losses and increases consistency. Now, let's talk about one of the biggest objections traders raise when they hear about naked trading. They say, "But I need indicators so I don't overthink." And here's the truth. Indicators don't remove overthinking. They create it. They give you conflicting information, they delay your entries, they distort your exits, and they make you question your decisions long after you've made them. A naked chart removes the middleman. It lets you engage with the market directly, and direct engagement is what builds confidence. Confidence doesn't come from adding tools, it comes from understanding the chart. It comes from watching how candles behave at key areas. It comes from studying failed moves, successful moves, and neutral moves. Confidence grows from exposure, not equipment. And when you commit to 7 days of pure exposure, no indicators, no training wheels, you force yourself to learn the real language of price. During this 7-day drill, something else will happen. You'll begin to see recurring behaviors. Every market has patterns, but not the rigid patterns you see in textbooks. I'm talking about behavior patterns. You'll notice that breakouts with low volume usually fail. You'll notice that trends often pull back into the last area of consolidation before continuing. You'll notice that reversals form when the market sweeps liquidity above a previous high or below a previous low. These behaviors repeat because traders repeat. The crowd is predictable, and when you learn to identify crowd behavior, you stop being a victim of it. Let me tell you something most educators won't say. Trading is not complicated. The market is not complicated. Price moves up, down, or sideways. That's it. The complexity comes from your mind, from your fear, from your desire for certainty. The chart is not confusing. Your expectations are. And once you see that clearly, simplicity becomes less scary. One of the most liberating moments for a trader is realizing that they don't need permission from indicators to trade well. They don't need confirmation signals. They don't need clutter. All they need is a calm mind and a chart that actually shows the truth instead of dressing it up. When you trade naked charts long enough, you'll notice that your stress decreases. Your hesitation fades. Your entries improve. Your exits become cleaner. You stop forcing trades. You stop fighting the market. You start listening. Naked trading doesn't mean taking random trades based on intuition. It means basing your decisions on the structure, levels, and volume that are right in front of you. It means waiting for price to come to your areas instead of chasing moves that already happened. It means understanding that patience is a skill, not a button you click. And it means accepting that clarity is more valuable than complexity. The more time you spend on a naked chart, the more fluent you become. At first, you'll feel slow. You'll question yourself. You'll be tempted to turn the indicators back on just to check. Don't. Ride out the discomfort. That discomfort is your breakthrough. That discomfort is your mind learning to rely on itself instead of outsourcing decisions to tools. You'll notice after a few days that speed comes back, but in a different way. You're not reacting faster because you're clicking faster. You're reacting faster because your brain is processing the chart more naturally. You stop seeing isolated candles and start seeing sequences. You stop seeing random moves and start seeing context. You stop seeing rejection as noise and start seeing it as a message. That's what clarity does. It sharpens you. Most traders never get to this stage because they never give themselves the chance. They get scared after 1 or 2 naked sessions and go right back to the clutter. They tell themselves they're not ready. They tell themselves they'll come back to it later. And they never do. That's why this drill is 7 days. Not 1 session, not 1 weekend. 7 uninterrupted days of exposure, 7 days of discomfort, 7 days of rewiring, 7 days of stripping away the noise until your brain reconnects with the only thing that matters. At the end of those 7 days, something powerful happens. When you finally turn your indicators back on, if you even feel the need to, you'll notice that they don't matter the way they used to. You'll see that they're not telling you anything new. They're just summarizing what your eyes are already reading. And that's when you realize you've been trading in hard mode this entire time. You were drowning in data you didn't need. You were cluttering your vision instead of sharpening it. Once you get to this point, simplicity stops feeling risky. It starts feeling natural. And once it feels natural, everything changes. Your emotional swings calm down. Your overthinking decreases. Your confidence grows. And that natural confidence is what makes you consistent. I want to leave you with a reminder as you start this drill. Simplicity isn't the absence of depth. It's the removal of noise. When you cut out the noise, you finally give yourself the chance to understand the market on an intimate level. And once you understand it, you stop fearing it. So here's your homework. For the next 7 days, trade with a naked chart. Price and volume only. Mark your levels. Study structure. Watch volume. Take screenshots of everything you notice. Journal the patterns you see. Pay attention to behavior, not indicators. And when you feel that urge to turn the indicators back on, remind yourself that discomfort is part of the process. You're breaking habits. You're learning the real language of the market. By the end of these 7 days, you'll understand something that could take years otherwise. You'll understand that simplicity is not a beginner strategy. It's the advanced strategy. It's the real strategy. The one that doesn't need shortcuts. The one that doesn't hide behind colors and lines. The one that shows you the truth plainly and gives you the confidence to act on it. Trading becomes easier when you stop complicating it. The market becomes clearer when you stop trying to outsmart it. You become a better trader when you learn to trust what the price is already telling you. And once you learn that, you'll never look at a cluttered chart the same way again. That's the path. Strip it down, train your eyes, build your confidence, and keep it simple.